In market news now, Asian financial markets were little changed as investors waited a congressional testimony from Federal Reserve Chair Jerome Powell, due to start later in the day, for clues on the central bank's next move on interest rates. Locally, retail chain Shoprite reported a 16.8% increase in group merchandise sales, raking in 106 billion rand for the 26 weeks ended January 2023. Shoprite's market share gains were attributed to healthy volume as well as customer growth, as well as an increased basket spend by its customers, with 26 million of whom are extra savings, rewards and card holders. We will be talking to the CEO in a little bit. However, to talk to us about the latest when it comes to the markets, we are joined by Makwe Masilela from Makwe Fund Managers. Makwe, thank you so much for your time. With a background that has mixed performance, especially when we look at our global peers, and a JSE that's relatively muted at this point, how would you describe the market sentiment, and what catalyst could actually ignite markets?
I think the markets continue to fight the Fed, as we know that the Fed have indicated, some of the officials, that they will continue to increase interest rates up until they win this fight against inflation. And today, as the Fed will be talking, giving testimony today and tomorrow, we expect the Fed to continue to tell us that these good economic numbers that we've been getting will help them to continue to increase interest rates to level higher than earlier expected. But market seems to be ignoring all that. And also we've seen that the data coming out of China, that their exports and imports fell in February. That indicates that the global economic recovery is still struggling, and also that in China itself there's no domestic demand, but the markets are continuing to have to be in this risk-on kind of mood. And as a result, the markets are saying, listen, yes, we know that interest rates might be going up, inflation is still high, but we strongly feel that we might probably have a soft landing instead of the recession that we were mainly talking about sometime last year. So markets continue to be resilient so far.
So we had Shoprite and Netbank reporting their results, and I suppose the takeaway for me is the concerns on the issue of load shedding and the impact on the economy. What were the highlights for you when you look at both those companies?
I mean, starting with Netbank, we can see that as much as we had some local and global economic challenges, but our economy continued to be resilient in a way, as we've seen that it managed to grow by almost 2%, in 2022, as we've seen with other economies as well. And yes, the guys managed to have almost an 11% increase when it comes to their revenue. And the very same increase in revenue helped their headline earnings per share to go up by 20%. And also we can see that their return on equity is sitting at 14%, which is still lower than the 2019 levels, which were around 11%. But look into their loans, they managed to grow that by almost 7%. And also for the fact that we've been seeing interest rates going up, that helped their net interest income to go up by almost 12%, and the guys managed to have excess cash, hence they could pay a record high final dividend, and I think it is up by almost 14%. And Shoprite, I think, confirms what we've been saying, that more than 60% of our people spend more than 50% of their money on food. As we've seen, their key brands, which is your Shoprite and also YouSave, increasing sales by 15.1%, and your Checkers Hyper increasing by almost 16.9%. And as you said in your intro, the guys managed to increase their market share by 1.4%, all because business has been growing volumes, and also the basket spend has increased. Of interest is that their customers last year, they've spent 12.7 billion rands more, and unfortunately load shedding continued to have an impact on them. We know Shoprite, they had to spend almost 560 million when it comes to diesel. That impacted their profits as headline earnings per share, which only managed to grow by 10.2%, and their dividends was up only 6.4%.
So with a lot of the SA companies yet to report results, and we've also seen some report at least over the past week or so, what are you looking for in the earnings? And also, what have you heard so far, and are you, I suppose, satisfied with the outlook coming out of the CEOs, or are you concerned?
that the impact of load shedding going forward, as much as we know that other companies might not be using a lot of electricity, but their customers might be using a lot of electricity, and how that is going to impact their businesses going forward. And yes, we know that guys that have a direct impact when it comes to electricity sales, they affect their operating costs, but the impact of this whole thing of load shedding, because that will also help us to factor in how much do we expect our economy to grow in 2023.
There's a lot happening both locally and globally, whether you look at South Africa's structural issues or some of the global aspects playing out. Is there a place for you to hide as an investor while we wait for the uncertainty to die down or while we wait for economic conditions to get better?
For the fact that we continue to expect interest rates to go up, that also helps on the bond yields, and hence we keep on seeing bond yields going up, and there are safe bonds out there that you can buy of some other entities. The very same entity that is getting us into trouble, when it comes to load shedding, they've got one of the best bonds that you can buy, and because they offer one of the best interest or yields that you can get, and we've seen some of the foreigners selling them, and for locals, I think it's a good thing to buy them, given that there's no currency risk.
On a balance of risks here, if you had to say which is more concerning, is it the risk of increasing inflation or is it the risk of sustained interest rate hikes that could eventually kill the economy?
For me, the worrisome thing is inflation, because all it does, it makes your money to start buying less. And inflation is not something that you can turn around just like that. We've seen so far, it's almost 2 years that we've been trying to fight this high inflation, and we are still not yet winning the battle. Interest rates, if we are wrong, we are able to call an emergency meeting and start dropping them just like that.
All right, Makwe, let's leave it there. Thank you so much for your time. That is Makwe Silela from Makwe Fund Managers. We're going to be talking to the CEO of Shoprite after this break, and some highlights here just before we get into that interview. We've seen their first half sales top 100 billion, but they do talk about the ongoing issues of load shedding, which we heard a little bit earlier from the Nedbank CEO talking about the impact it's having on their clients. However, let's take a break, and when we come back, we'll have that conversation for you.